Okay, let's dive right in. The Indian stock market has been a sea of red for the second day straight, and you can feel the tension. So, what's really causing this big sell-off? Well, we're going to break it all down for you. The numbers, the global jitters, the fascinating battles happening inside our own market, and what it all might mean for what's next.
Yeah, this wasn't just a minor blip on the radar. We're talking 2 straight days of serious selling pressure, and that's got a lot of investors on edge. And, it raises that one big question.
Is this all homegrown trouble, or are there bigger global forces at play here? The answer is, well, it's a bit of both. We're going to unpack everything from anxieties brewing overseas to a pretty incredible tug-of-war happening right here at home.
To really get what happened, you have to start with the numbers. And believe me, today's numbers painted a very, very clear picture of a market that's feeling the heat.
So, the BSE Sensex plunged by over 436 points, and the Nifty 50, it wasn't far behind, dropping by more than 120. Now, these are pretty significant moves that tell you a real wave of pessimism swept through the trading floors. But honestly, the headline numbers, they only tell you part of the story. To see what was really going on, you've got to look at the market's breadth. And wow, for every single stock that went up, nearly 6 went down. We're talking a staggering 2,346 stocks falling on the NSE, while only 391 managed to gain any ground. That tells you this wasn't just a few big companies having a bad day. The selling was deep and it was widespread.
Okay, so what's sparking all this negativity? Well, a huge part of the answer actually lies beyond India's borders. There's this trio of global headwinds that's just making investors really, really nervous right now.
So you've got 3 key pressure points. First, the rupee is getting weaker, inching towards its all-time low at 90.15 against the dollar. Second, there are these whispers, these growing concerns about potential U.S. tariffs on Indian rice exports. And then there's the big one. All eyes are glued on the U.S. Federal Reserve. Their meeting this Wednesday is huge because the market is just holding its breath, waiting to hear what they'll say about interest rates, not just for now, but all the way out to 2026.
But here's the thing. It wasn't just about what's happening globally. What we saw today was also the story of a massive battle between 2 different kinds of investors. It was a genuine tug-of-war for control of the market's direction.
And this is where the battle lines were drawn. On one side, you had the foreign institutional investors, the FIIs, and they were selling, pulling out over 650 crore rupees. But on the other side, our own domestic institutional investors, the DIIs, fought back hard. They poured in a massive 4,189 crore. This domestic buying power basically acted like a giant shield. I mean, without it, today's drop could have been so much worse.
And this internal story gets even more interesting when you look closer. While the main Nifty 50 index was down, the mid and small cap indices, they actually finished in the green. This shows a really fascinating split in the market. It seems like while investors were selling off the big blue-chip stocks, they were still finding opportunities and actively buying into smaller companies. It shows this surprising pocket of resilience.
Okay, so we've seen the overall picture, that internal tug-of-war. Now let's zoom in a little and see which specific sectors were on the losing end of that battle.
The selling was definitely not spread evenly. The realty sector felt the most pain today, dropping a sharp 3.5%. Public sector banks were right there with them, falling 2.8%. And the media sector wasn't far behind. Metals and auto stocks also had a pretty rough day, facing some serious weakness. And if you look at the individual stocks, you can see a few heavyweights really drag the market down. Major PSU banks like PNB and Canara Bank got hit hard, falling over 4%. And then you have giants like Asian Paints and IndusInd Bank also dropping more than 3.5%. That all adds up to the negative mood.
So, after 2 days of this, with all these conflicting signals, what should you be looking for now? Let's try to read the market's mood and check out what the experts are thinking.
So, a really key indicator to watch is something called the India VIX. Just think of it as the market's fear gauge. Today it jumped nearly 8%, which is a clear signal that anxiety is on the rise. But, and this is an important but, it's still below the 12 level, which is often seen as the danger zone. So what this tells us is that we're seeing caution, for sure, but not outright panic. At least, not yet.
So what's the general feeling from the experts? First, get ready for more choppy waters, at least until the U.S. Fed makes its decision. Many analysts are suggesting a more defensive strategy, focusing on high-quality, large-cap stocks. The 2 biggest things to keep on your radar will be what the Fed signals for 2026 and whether the rupee can hold its ground or if it breaks past that crucial 90.50 level.
And all of this leaves us with the big, critical question, doesn't it? We saw today just how powerful our domestic investors were, acting as a shield against foreign selling and all those global fears. But as those outside pressures continue to build, the great unknown is whether that domestic strength is enough to keep holding the line. And that, well, that's the story we'll all be watching.